Höga börser och AI-hype oroar en del bedömare, men kanske behöver man inte vara så pessimistisk riktigt än. Vi säger varmt välkommen till Dr. Dirk Steffen, joining us from Deutsche Bank. Wonderful to have you here, visiting from Frankfurt.
Thank you for having me.
I wanted to start with the concerns I feel about AI capex being circular and the hype being too hypey, essentially.
Yeah.
Bubble risks. How worried should investors be about this?
I mean, it's interesting to see, right? Whenever a market's rising strongly for more than, let's say, a few quarters, we start with the bubble discussion, right? And rightly so, because we need to see if these price movements to the upside are actually rectified or can be also explained by fundamentals. So we are checking that, the state of the bubble or the temperature, if you like, on a daily basis, and from our analysis, what we see is that every earnings season so far, actually these investments have been backed up by strong earnings reports by the companies. So it's, other than maybe in the late 90s or so, what we see is that it's an earnings-driven rally, and that is actually making us, at least for now, still comfortable with this cycle.
Okay, and there might be some air pockets in an environment like this, of course.
Absolutely, because we're dealing here with semiconductors, right? So visibility is quite low. It's also a very complex market, very different types of chips that are being produced, be it in the auto sector or then in the high-end AI-related activities, where computational power is so much more important. But what we see also from the industry itself, that there's pretty low visibility. That means that in this broader scheme of in our view, very strong trend and growth trend, which is still intact, there might be these air pockets you mentioned. So all of a sudden, there's maybe too much supply of these chips, and not maybe exactly in that quarter. Inventories are very, very high already, so there might be a setback. I think that's part of this animal, right? We're dealing with so quite volatile sector.
You represent the private banking sides of Deutsche Bank. I'm a little bit curious about the mood among customers and clients that you talk with. Are people euphoric or rather skeptical of this market right now?
I mean, you have this cycle or the anatomy of a bull market, right? So where typically it starts in 100% pessimism, then skepticism, then optimism, and then euphoria. We would think that we just entered optimism. At least from the indicators we are watching. Our clients, I would say, many of them are still quite skeptical, because it's really the sheer size of the performance. If you compare to early April, we are up 20, 25, 30% at times of certain sectors of the market. So I think it's fair to be a bit skeptical about what's happening. But as I said, it's still backed up by earnings, so looks pretty decent.
On the other hand, I want to talk about Europe, and I believe you see a lot of potential in European markets going forward. If you look at the economy, it's been a bit of a disappointment so far. We're waiting for a European boom. Will it ever come, and when?
I mean, the good news is that I'm German, right? I can't deny it. I'm from Germany, so I'm used to the bad news. Right? So Germany did not grow at all over the last 5 years, so it's nothing new.
But the stock market has been doing just fine, nonetheless.
Absolutely. So, and it was one of the favorite questions we got of our clients and also journalists. How is it possible the DAX posting all-time highs if the German economy is stagnating, right? The answer is that it's a global stock market, really. So the companies are global. So they are also geared towards the German domestic economy, but that just didn't help over the last 5 years. Now, looking forward, we think things could be much more exciting for the German economy and for the European, the Eurozone economy, and also neighbor countries. So this is something special, because 2025, we see it as a transition year, if you want. It's really dominated by negative effects like trade, tariffs, all the stuff you know about. And it's actually quite, I would say, natural to see economies suffering from that. Whereas let's say the recipe or the help we will get from the public sector, the fiscal expansion and so on, will be felt in 26 and 27. And the market's, of course, pricing that today already. So the market's up 20% year to date already, pricing in a lot of global factors, but also increasingly domestic factors.
Is it too late to buy then?
Maybe it's even a good point in time because if you look at it, last 4 months or so, the market didn't go anywhere. So there's a sort of digesting that strong performance at an elevated level. And I think we're gearing up towards something much more exciting.
We talked about Germany, and you mentioned neighboring countries. I'd like to think of Sweden as a beneficiary, obviously. But could you touch upon Eastern Europe? Could you touch upon Poland in this dynamic?
Yeah, sure. Thank you for that question. So Poland, I mean, what's not to like about it? So 22 years without a recession. It's driven a lot also by German investments and the cycle, actually, the exports. If you look at the Polish exports, for instance, they follow closely German GDP. So there's I would say, a strong connection between the two economies. But increasingly over the last 20 years, after such a strong growth story, of course, the domestic drivers for Poland are very strong as well. But it helps if you get some external positive effects on top of it. And this is also true for other countries like the Czech Republic, Hungary, and so on. So I think if Germany starts moving just a little bit, that's probably helpful.
Helpful for many, Dr. Dirk Steffen. Thank you so much for coming here.
My pleasure.
Det här är en podd från EFN Ekonomikanalen. Ansvarig utgivare är Anders Hägerstrand.